This was driven mainly off of your prescription drugs. Is that fair to say?
I think there was a balance. It was heavily weighted towards the prescription drug side, but medical devices also had a beat compared to consensus analysts. We're very optimistic about the continued cadence of growth, of improved growth that we've had there, and we're looking forward to 2020 where we're going to be at market performance or better. But prescription drugs did perform very well across all of our therapeutic areas: immunology, oncology, neuroscience, pulmonary hypertension, not just for the short term, David, but also the long term. We had some significant approvals during the quarter as well.
How much better would you have done but for the strong dollar?
So if you look on a top line basis, it was worth almost 4 points, 3.8 points of growth. And if you look at the bottom line, it was worth about 8 cents or about 3.9%.
So, Joe, in January, you said that you expected growth to either stall or even decline in 2019. What changed? How did you manage to beat expectations and lift your expectations in just a couple months?
Yeah, good morning, Lisa. So in January, we said we would grow on an operational basis and that some of the currency headwinds promulgated by the stronger dollar would cause us to have a reported possible decline. We had strength, again, from our portfolio in neuroscience, in immunology and oncology, and then medical devices improved a little bit faster than what we were expecting as well. So that's given us confidence even greater than what we had in January, and we raised our operational guidance by 50 basis points this morning.
So, Joe, given the real driving force behind a lot of Johnson & Johnson, we're always interested in the pipeline on new prescription drugs as against to the threats from generics coming up. How do you compare that balance? So,
you know, David, once we have a chance to anniversary the impact of generic and biosimilar erosion, probably later this year, that's where our current portfolio and the new pipeline will kick in. We had a significant approval in the quarter with Spravato, which is the first treatment for people suffering from treatment-resistant depression in almost 30 years. It's great for our business, but it's even better for patients. And then just the other day, we had a therapeutic for bladder cancer. So about 20,000 patients in the U.S. suffer from bladder cancer. This product could help about 25% of those patients. So again, finding areas of significant unmet medical need doesn't only portend for good short-term results, but I think a long-term horizon. And if you look at our expanded portfolio, we have a number of line extensions and new indications on existing medicines like Darzalex, Imbruvica, and Xarelto.
Joe, Johnson & Johnson did see a decline in sales of medical devices as well as consumer products, and I'm just wondering what the plan is there to perhaps accelerate, boost sales a bit.
Yeah. So, Lisa, if you cancel out the noise, so if you take away currency as well as a significant divestiture that we had related to our diabetes monitoring business, the actual growth was 4.3%. That's probably our best growth in about 3 years. Consumer, you're right. I think we did see a little bit of a market softness, but we're very encouraged by the strong share that we saw in our over-the-counter medicines. If you think about Tylenol, it's regained its #1 spot amongst all analgesics. And then Neutrogena in the beauty space continues to perform very well. So we think there's a market contraction going on, but we'll see that play out with some of our competitors reporting later on in the earnings season.
Joe, Johnson & Johnson and the other pharmaceutical companies are getting a lot of attention in Washington these days. There have been a series of hearings before Senator Grassley, et cetera. Give us an update from your point of view on the potential headwinds from Washington.
Yep. So, David, you know, I spoke about the price that, or the success that we've had with our pharmaceutical portfolio. Last year was about 8%, similar in the first quarter. That is actually in spite of price decreases. We just issued a transparency report. We were leaders in the industry to do so. We had 6.8% price decline last year. We think we win on innovation, finding those areas of unmet need that patients and physicians value. But the dialogue that's happening right now is, I think, very important for the sustainability of not just Johnson & Johnson, but the industry at large. Yeah. I can tell you that the Johnson & Johnson portfolio had $21 billion in discounts as a significant increase, and as I just mentioned, we had a net price decrease. Unfortunately, those discounts aren't getting into the hands of the patients who go to the pharmacy on a monthly basis. So there's a number of fixes that need to occur.
Joe, I want to go back to something that you said. You said you think that we're seeing a contraction in the consumer products space, which is a little bit jarring to me because I thought that there was actually an increase in spending on beauty products and things like that. Can you speak a little bit more about what you mean about this contraction?
Yeah, so if we look at our market share, Lisa, for the quarter, it held up very strong. We didn't have a loss of share. So our conclusion therefore by default is that the market is softening a little bit. Now that could be due to inventory contractions at some of the larger box retailers. E-commerce is pretty efficient in terms of how they manage their supply chain logistics. So it could be a number of factors, and we'll just have to get a little bit more information to see what the drivers of that contraction could be.